Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. I'm sorry, but this is a long commentary as we have got a lot to talk about here. So here goes. Yet again, and now for so many months, I've looked at the daily chart on a weekly basis and seen the same basic drivers all still moving this market higher despite the occasional hiccup. The rock of certainty is still anchored on a few patterns. These are the middle time, currently 17,390, and upper time, currently 2885, of the huge yet shallowly bullish 2017-2018 bullish shift pitchfork. The upper time had been significant back in September when the top of the market was capped by this very same upper time. However, in October the market breached it, but it was a breach rather than a break, as the market made just a single close over it before heading down, actually being victim to a pipe top pattern. I also once again recognise the role of the lower time, currently 18,125, and the middle time, currently 20,435, of the October 2020 to March 2021 bullish shift pitchfork. These times have shown the more recent bullish angle of attack, especially the lower time when working with the slowly rising long moving average, currently 18,220. I'd like to quote once again something I originally said now some 14 weeks ago, and I quote, "Whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it is missing." End of quote. This had gone a long way to mitigating the action seen in September. However, the peak and low of September that resulted in a monthly key reversal up for the month have helped draw a newer bullish shift pitchfork for the April to September move. This new pitchfork has already seen action, with the middle time currently at 19,685 on the way up in early October. Then the peak in mid-October, where together with the old upper time of the 2017-2018 bullish shift pitchfork, this new upper time, currently 2305, capped the move up. And most recently this week, the middle time, currently 19,685, has acted as a halt and attractor to the market, especially last week and into this week on a closing basis. As I said 2 weeks ago, it is all getting very, very interesting now. This is because while September was a large monthly key reversal down, October was an even bigger immediate countering monthly key reversal up. These are huge forces in play here in a very confined space relatively, despite the wide ranges, and in a very short period of time. Thus now I'd like to introduce a new pattern that has only recently made itself visible to me over the last 2 weeks or so. It is to regard the whole action from late June to date as a huge diamond pattern. It is a little lopsided to the right on top in my daily chart, but I hope you can see what I can see. Now, diamond patterns can be tops, bottoms, or continuation patterns. This one can only be a top or a bullish continuation pattern. So this diamond gives us a lower uptrend trend line, currently at 18,265, and an upper downtrend trend line, currently at 21,250. For the moment, those will be the two key trend lines I'll be concentrating upon going forward, as well as the previously mentioned pitchfork times. For information, this diamond reaches an apex at about the end of January next year. LME 3-month zinc. Anyone who's paid even the mildest attention to this commentary over the last few months would have known how I had warned something like the run-up in October might happen, and how I'd compared the market prior to the run-up as a drunken driver trying to steer a clear course, but something very violent was inevitably going to happen. Anyway, that part is over for the moment, and prices have started to travel down the far side of the mountain created in October. Late last week and going into this week, the market has started to slow its descent and to show some indecision. Though admittedly it is on a larger scale due to the big move up. Nevertheless, prices have started to hesitate upon approach to the old broken May 2020 to date uptrend, currently at 32.48. Now, this uptrend has shown the bullish angle of attack of the market for many months now, despite being broken, but stopped working in early October when the market shot up. It'll be interesting now to see if the dynamic forces that we once saw there are still there, or if indeed it is now the congestion between the April 2018 high at 33.02 and 33.51 that is slowing the descent and causing the hesitation. There is now a bigger question to be asked, and I will ponder this one for a while. I think it is whether the recent action, specifically the mid-August to date action, is a bump and run reversal top. I've drawn a bump and run reversal top trend line currently at 30.15, just in case. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investment Services International Limited. And here comes the final bit.